Good morning, everyone. How are you this fine Tuesday morning? How did you fare yesterday? It looks like the market was maybe a little bit of a roller coaster. Rather choppy, big move lower out of the open, bouncing around through most of the session, and then a little bit of a rally through the lows and certainly through the overnight. So we're actually opening with a little bit of a gap below the market here. I was just looking at my daily chart before the session started, and I'm starting to get a little bit more bearish on the stock market as a whole. We'll see how things play out, of course. All right, well, a little bit of a strong open. We've got a first micro-macro cross signal here on the hawk. If you're looking for your first in-sync eagle signal, that would be this one right here. Or if you like, I think that one was right on the open, but this one followed shortly thereafter. So the eagle looking a little bit bullish, but you can see our trend mode quickly coming to an end as we're heading into a scalp type environment. And that means we could see things get a little bit choppier. So all I'm doing is I'm just giving the market a few minutes here to settle in. Hey, way to go, Mark. Mark says, good morning, Eric. Well, good morning, Mark. Mark writes, hope your trip was fun. Yes, it was. It was a very enjoyable weekend. Thank you. Mark says, I made $500 this morning before the market on the Falcon late filter entry. Let's take a look here at which one Mark might have been looking at. I think this one, perhaps right here, that looks like a late filter entry signal. Trend line never changes color. Filter goes out of sync, comes back into sync. Tends to be a very high probability signal on the Falcon, and it was in this case as well. Nicely done, Mark. Mark says, and yesterday was a good one too at 7:15 for the day. You're just crushing it here, Mark. Mark writes, I've been running at 80% plus of my trades being profitable and sure finding the DTS tools to be great. As long as I stick to my rules and only take the best setups, I'm doing well. And, you know, that is a hard lesson to learn for many of us. You know, we start shooting from the hip, if you will, instead of holding out for the best signals. Well, here we are just kind of trading sideways. And now we are in scalp mode for about 7 minutes time, moving back to trend mode after that. So we're flip-flopping here a little bit. Okay, we're still kind of trending sideways, as you can see. All right, a little bit of an uptick. It looks as though we've got, currently we've got a bull market, albeit a rather weak one. Not sure our first eagle signal has hit its profit objective yet. No, not quite, but sure is close. So first eagle signal, not a bad start to the day. Sorry, did I cough in your ear? I thought I had the mute on. My apologies if I did. Jay's asking, ATR is the default trail indicator. How do I set fixed as the default, as well as stops and profit targets for the trade manager? Let me show you. So if you have your trade manager already turned on, what you need to do is you need to go to your strategies window, select trade manager, and the first thing you need to do is turn it off. So click false and apply, and that's going to remove the trade manager. Now you can make changes to it. You can't make changes so long as it's on. So if you pull up here, about 2/3 of the way to the top, you'll see current stop indicators, default trail indicator ATR. From here you can select whatever indicator you would like. So if you're going to go fixed, you're probably, if you want it as a default, you're probably going to go fixed off of the close. Otherwise, you're going to have to keep changing if it's going to be high and low. And while you're here, I would also suggest changing your invalid trail stop ticks. I think by default it's set at 10. I find that extremely tight. And you'll probably do better giving yourself a little bit room initially. This is your initial stop when the market is against your stop strategy. You can always move it once the stop is live, but you don't want to get stopped out prematurely. So I've changed mine to 30, which I find is pretty good. And let's see, what else were you asking, Jay? Oh, stops and profit targets. Okay, those are down here a little bit further. By the way, it's worth your while to take a couple of minutes and just go through your trade manager. It really doesn't take that long. Your account protection parameters, about 2/3 of the way down, you're going to see this value here, click, tick, target types. If it's set on click, that means you will manually set your profit targets. If it's set on tick, the program will automatically select profit objectives for you. Now T1, T2, T3 percentage, this is how you want to split up your trade. Currently I've set it so I've got a 50-50 split. So I've got target 1 at 50%, target 2 0, target 3 0. That means the other 50% of my trade is going to be a runner. T1 ticks, T2 ticks, T3 ticks, these are your preset targets. So I have my target 1 in a number of ticks set at 20 ticks. And then you can also set targets 2, targets 3 if you would like to set up your trade differently. When you've done all that, you've made all the changes the way you like them, go do yourself a favor, go here to save, just click and type in a template name, whatever you want to call it, it doesn't matter, and then hit enter. It won't look much different than this. The name will just disappear. But what it's going to do is it's going to save your template so that the next time you open a new chart, you don't have to go through all this anymore. You can just load. You can go here to load. You can load your template, and it will have all those parameters for you. Remember to turn your trade manager back on and click apply. And then you will have all your new changes. Your default strategy will now be your fixed strategy. And you may need to set this at a different value. I think there's no way to change the default tick offset, but at least that's only one thing you need to click instead of several. All right, so that's how you make your changes. Okay, we've got a soft edge sell going on here now. Target the hard edge right here, down back near the low of the morning. Looks like around the 58.96 area. I'm not crazy about shorting, but we do have a chance at a second push entry here. The second push simply means we let the signal engage. We see where the market flinches, and then we place our entry below there. Counter trend trades are always difficult. I tend to find that the number 2 signal works better when a number 3 signal precedes it, a hard edge bounce. The only good thing about a counter trend signal is that you definitely know when you're wrong on the trade. Right? You place your stops above the high, in this case above the high. And if the market engages you and trades back through the high, well then you can definitely say, no, I was wrong, time to get out of that position. Sometimes the hardest thing for us to do as traders is just to wait. You know, we're like little kids. We can't just sit there and not do anything. And we're always, there's that FOMO, fear of missing out. We're always so paranoid that we're going to miss something. It's okay to miss a move. I miss many moves. So long as the moves you take are profitable, that's the important part. All right, so you can see we're getting a little bit of a retest now of the high. The market may fail here and try to head a little bit lower. I think this is a rather modest objective for the market. A retrace back to the low of the morning doesn't seem like I'm making it work all that hard. But like I said, counter trend signals by definition a very difficult trade to take. Well, at least they didn't slip me a tick. That's a good start. You can see now there's that hard edge bounce, that number 3 signal, which of course would be the continuation signal. Whenever the market is going sideways like this, you see how we're just retracing our steps? When the market is doing that, it's not a bad idea to incorporate a second push entry strategy. So if you're looking to take this number 3 signal, entering above this high should help keep you on the right side of the trade. This now going to be another number 2 signal. I don't know if you can make out the background highlight, but it's starting to shade, and you can see we've got the pre-signal, soft edge sell. Okay, got the break even. Actually, this one's got some room to move if you wanted to try to run this one out. We do have some downside potential here, as the market may attempt to fill that opening range gap. Okay, there's one for the good guys. Okay, we're holding up a little bit now that we are at the hard edge, back near the lows of the morning. We've got a little ways to go if we're going to realize the cloud crossover signal. So that could be a little ways off still. In fact, we're kind of ripe for a hard edge bounce, aren't we? Before I get too cocky on the short side, we first need to see what the buyers can do on the long side. The hawk looking a little bearish now. The falcon actually producing well, it did the trend change signal back here, but a pseudo late filter entry signal to the short side. Technically, if you're going to follow it in the purest forms, the signal was spoiled when the trend line went green right here for a single bar. Now, sometimes, if it's only out of sync for a single bar, I will still treat it as a late filter entry. If it gets out of sync for 3, 4, 5 bars, as it does through here, it no longer qualifies, even though this signal also worked out. All right, so here we're getting a hard edge bounce signal. It did not print as such because the clouds are a little bit twisted, but it is still a hard edge bounce. So we do have, again, the opportunity for a second push entry. You can look to enter above there. I'll probably risk it a little bit deeper than the low of the day. What I'm hoping is that this may turn into like a bull flag type formation. Nicely done, Mark. Mark says there was divergence to the downside at 843. So you're probably looking through here somewhere. I'm not entirely sure what you saw there, but Mark says I managed to pick up another $250. Way to go. Had to ride out a couple of bounces, but my stop was up at 59.13, so that's good. You gave yourself lots of wiggle room. Um, Last thing you want to do is get into the habit of strangling your trades. That's never a good idea. Mark says the waiting finally paid off, and I may be done unless something irresistible presents itself. You had a very good day today, Mark, and we're only half hour into the session. Nicely done. Okay, so we're bullish now here on the Raptor. Again, the hard edge bounce, and the signal did not prompt as it did here, just because the clouds were starting to dip. Oh, did I get slipped a tick on that one? I did too. That I don't like to see. Slippage means that something's not quite right. A one tick slip isn't too bad. But when you start slipping 2 or 3 ticks, especially on a market like the NASDAQ, there's something a little bit funky. Overall, we still haven't made any gains one way or the other. We're still retracing the morning's range, aren't we? The low of the morning down here around 58.95, the high 59.12 half, and we're just kind of stuck right in the middle. Been going over those same numbers. Okay, now that the clouds are back in sync, you can see we've produced a number one signal. So the clouds went out of sync, come back into sync. That's technically a number one. And I would like to see the market get up here, obviously a little bit higher, a little bit closer to the break even. There we go, got the break even. And it looks as though we're going to attempt to retest the highs of the morning, and we got our profit target along the way as well. Okay, not a bad start. Not a bad start at all. And I'm glad that I'm not being silly today trying to run out my trades. Rather, taking profit on target has worked out very well for both those positions. The earlier short, you can see we hit our profit objective, which was here at the hard edge. This one, we hit our profit objective on the number, and we saw a slight reversal from there. I'm not going to say we're going to see a full-blown reversal just yet, but so many times I think you'll do better taking profit on target. If you can afford multiple contracts, having a runner in play is always nice for those times the market does explode. But you need to remember that the majority of times, what's the statistic, 75%? 75% of the time the market is ranging. Okay, so we're back now at the top end of the trading range. You can see the hawk giving us a lot of yellow bars through here. The falcon also flip-flopping, which is a little unusual. The eagle gave us a nice little red bar buy signal, so we've had a couple decent opportunities here this morning. Paul says, I'm sim trading a 20-tick chart. Can you show me how to set up the cloud? Alrighty. So I'm assuming your value here is 20 ticks. If you go to your indicator window, you're going to find your Raptor 2.0 and then pull down about halfways. You're going to get your cloud set up and your hawk brick sizes. Now here's the rough relationship. Your second cloud is going to be the same as your brick size, so you'll probably want to change that to 20 ticks. Your other cloud is approximately 1.5 times the faster cloud, in which case you may want to try 30 ticks for your other cloud. Your hawk brick is 75%, 3/4 of your cloud size or brick size. So to keep that relationship constant, you may want to try 15 ticks for your hawk. What that's going to do, or what it should do, is it should maintain the relationship between all the elements of the Raptor. So rather than get a chart that looks, with a huge cloud and it all messed up anyway, you should get a system that looks very similar to your default chart. And what you'll want to do then is you'll want to go back and you'll want to double check the signals to see how the signals are working out, to make sure that they're decent signals. Now, not every signal is going to be worth taking, of course, right? Like here's a number 2 signal, didn't have a whole lot of context going in, but you want to make sure you're A, not generating too many signals, and B, that the signal generation is actually reasonably accurate. The Raptor 2.0 is the most tweakable of the DTS system, so you can change the settings to accommodate the market or your particular trading style. But that's what I would use as a starting point. Well, we're stumbling a little bit here on the highs. Yeah, no problem, Paul. Paul says, thanks, that made a difference. Yeah, so long as you can keep that rough relationship, your charts should function pretty well. But like I said, feel free to experiment. Some people like to speed things up, in which case you can reduce the cloud numbers a little bit and the brick size. But bear in mind, more is not necessarily better. Having more signals to choose from won't necessarily make you more profitable. All right, well, we're kind of still dead sideways here. Not much follow through on the rest of these signals, at least not yet. I would not be surprised to see another move lower. I think that opening range gap is going to be calling to a lot of traders, and we may see the sellers. See, we've got a test to the high. This may embolden the sellers to try to short the market again. In fact, if you wanted, you could see this as an extended number 2 signal. There you go. There's the number 2 signal. As traders attempt to short the market again. Not a whole lot of market participation overall. Again, it's just the sideways drift of the market. Prices are very happy here. I had a feeling had I tried to short this number 2 signal, I probably would have been slipped a tick again. It's just the volume seems very light. These bars are pretty narrow overall, and we're just spending a lot of time going back and forth right now. All right, so here's another attempt to move the market lower again. We're right in the middle of this whole sideways trading range, though. Whenever you find yourself in the center of a trading range, it's going to be difficult trading. So if we highlight our range approximately like this, you can see we're right in the middle. A lot of yellow bars here on the hawk, just confirming the sideways nature of the market at the moment. Just the sheer volume of signals here on the Raptor should also indicate to you that the market is sideways. So if you see that, if you see the market printing signals one after the other, just look to the left of your chart. You should never ignore the left side of your chart. In fact, the best traders probably pay at least as much attention to the left side of the chart as to these last few bars that are forming. Right? So many of us have a tendency just to watch here and totally disregard everything that came before it. It's a bad habit. Okay, looks like we've got a pretty decent test of the extreme now. The extreme being right here, the high. Price is falling off and likely to test the bottom end of the trading range, of today's trading range. All right, well, that's a little bit more aggressive move to the short side. Might be too early to call it a bear trend as we retest the lows of the morning. The hawk already turning over, as did the falcon. The eagle band now also turning, so it looks as though we are going to see a little bit of a counter trend move here. Yeah, Dan says that counter trend moved quickly. That is one thing about counter trend moves as well, and I suppose one of the reasons they're so tempting is that when they do take hold, there's usually a pretty quick move. You don't normally have to wait a very long time for a counter trend move to develop. Oh, Mark took a chance one more time. Says another 150 on that first micro macro cross. 3 for 3 and I'm done. Well done. Yeah, not an easy trading day today. We got to pick and choose. So the first micro macro cross right here that Mark took advantage of. Very high probability signal in the hawk, by the way. It will find its profit objective more often than not. In fact, it's running about 80%. Well, actually higher than that, but that's what I tell people, because if I tell them it's like 85% accurate, they don't believe me. Okay, so here on the Raptor now and the Eagle, we're working trend change signals. On the Raptor, it's going to be a cloud crossover. So the clouds have crossed almost 100%. We still have the hard edges to wait for. But whenever the clouds cross, we get this characteristic pullback. And if the trend is to continue, we should see a signal produce out of here. We should see the clouds push the market lower. So here we are, we're coming into the hard edge from underneath now. Likewise here on the eagle, and we're working a macro pullback signal on the hawk. The falcon was trying to do a late filter entry, but that's been spoiled. So I suppose if you were anxious to get into the trade, if you didn't want to wait for the hard edge bounce signal to form here, you do have a chance at a macro pullback signal here on the hawk. I don't know if I want to do 2 contracts on that. We'll go just throw a single on it. And there's not much structure here where to place a stop. So when I'm at a loss for a stop placement, very often I'll look just at the crest in the macro line as a possible place to put the stop. Now, you can see this is a very aggressive trade. The safer trade, if you will be to actually wait for the reaction to the hard edge and for the market to head lower. Had I not taken the macro pullback signal, I would not be taking the yellow bar here. Yellow bars, I tend to ignore them on the hawk, except in a 4-arrow consolidation, which this is not. Well, I suppose if you started counting down here, 1, 2, 3, that could be your 4th arrow. Oh, come on now, don't stop now. Couple of ticks short of the break even and our profit objective. Okay, you could afford to be a little bit more aggressive with your stops if you like on this move lower. If the market fails at this point, well, it's probably not going to make the profit target, which we just did. Hooray! And it looks like we're going to head down here now and retest the lows. So the market getting a much more bearish bias to it. There's a little bit of a pullback. And I suppose if you didn't consider this signal here, your 4-arrow consolidation, this definitely did qualify as a 4-arrow consolidation. Looks like I got slipped a tick on that one as well. Yes, I did. So the market's fairly thin right now. I don't know if we're waiting on another report or what the deal is, but we're pretty thin, all right. Mark says, all the scheduled news is out for the day. Not sure what's causing the downside. Most of the news was positive. And there is the trouble with trading the news. You see, just because news is positive on the surface does not mean it will have a bullish effect on the market. And just because news is bearish on the surface does not mean it will have a negative effect on the market. Rather, it is all about market perception. And when you hear bullish news, you should be getting ready to short. It really does play out that way. There was a book years ago, Wall Street Gang. I think Richard Ney was the fellow who wrote it. And part of the premise of the book was how market insiders, for lack of a better term, and I don't want to sound like a conspiracy nut, but how the markets are kind of manipulated through the news, how these large traders and banks and individuals, organizations, will leak misleading news to the press. So they'll tell everybody how rosy everything is, get people to buy, and then you'll see the stock or commodity in question tank. We are on the doorstep of October, and while Black October was nothing to be considered last year, this year I think we've got a little bit more toppiness in the market. Hold on a second here. I will build you a chart and show you what I'm talking about. I'm not alone in thinking the market is due for a correction of sorts, in spite of the monster uptrend we've had. Okay, so here is a daily NASDAQ chart. Oh, I guess I should load more data. Hold on. Okay, we'll try to reload. Did that give me more? No. All right, never mind. But this is the December NASDAQ, and you can see we're getting fairly toppy. A lot of traders are going to be looking at this like a wedge type formation. We did break this trend line, which is significant. Normally there will be a bullish reaction as a result. I left volume on here so that you can see how the volume has been increasing on some of these moves lower. Now you have to remember, volume is roughly a 50-50 split. So a big bar like this, even though it finished bearish, half of the volume approximately would have been bullish. The fact of the matter is there was a lot of trading on this bar. So if you happen to see a quiet day to the upside and very, very light volume, that pretty much tells you that the buyers are done, right? So if we have a bullish day and no bullish volume, that tells you that nobody was buying. Nobody was buying the market up. If nobody's buying, well, then it's probably going to head lower. So we'll see. Time will tell. But the way I'm looking at a chart, it is starting, at the very least, I think we can say the market is drifting into more of a sideways trading range. So as it gets toward the bottom end of the range, you can see there was some very aggressive buying here, very aggressive buying here. So as it gets back down to the 75, pardon me, 57.50, 57.60 area, I think we can look to buy. And then as it trades back up here near 6,000, I think we can be more aggressive on the short side. We're right in the middle again, around 5,900, which is going to make it a little bit tricky trading-wise. But if I had to guess, I would say the market's going to come down here, test the lower end of the trading range, which extends all the way from the low here at 57.60 to these lows down here. And these would be at around the 57.92 area. Which, if you remember a few weeks back, 57.92, 57.90, big numbers. So I think the market being a little bit more bearish now, you can consider getting on board some of these sell signals. Here's a sell signal now on the Eagle, which is a follow-up to our earlier trend change signal. This is a hard edge bounce. They didn't slip me a tick on that one. That's nice. Here on the Raptor as well, we have a hard edge bounce. It must have come up just a tick short for it not to qualify as a hard edge bounce, but that is a hard edge bounce. This is why it's important as well to be able to spot some of these things visually. Right? You want to be able to recognize your patterns, even though you may not get a signal prompt. Could be a little bit choppy though. This Eagle short, a little bit on the more aggressive side. Stops here at the crest and the hard edge, which hopefully will be far enough away. And prices may try to trickle lower and get into that opening range gap. Where did we leave off yesterday? Oh, right there. So around the 58.80 mark, which is pretty close to my profit objective. In fact, I may bring the break even up here a little. Okay, got to the break even. See if we can get any follow through. Of course, you know there's $100 in profit there, so don't be shy about grabbing that. I'm going to see if I can't hold on for the full profit objective. we're trying. A little bit of a reactionary bar there as we get close to this 58.80 area. It's to be expected, though. That's not a real big surprise. Oh, phew. That was hard work. Okay, well, we caught that nice little move to the downside as well. So a pretty good morning overall. And it looks like the market may try to head lower from here still. It's not uncommon to see a reaction after we hit the high probability profit objective, however, which we have just done. So we may get a little bit of a hiccup, but overall the market, I think we can safely say, has moved into a downtrend today. All right, gang, we're going to close up shop here for the morning. And I will see you again tomorrow. If you are trading the rest of the afternoon, I think you're going to want to favor the short side. I don't think you want to load up too much on the buy side, as it looks like the sellers may try to inch the market lower. At least that's how it looks at the moment. Okay, we'll talk to you tomorrow then. See you tomorrow. Bye for now.